Welcome back, everybody, to Altcoin Daily. My name is Aaron. Very important video today. Make sure you watch the entire thing because I have information that the mainstream media is not sharing with you. That's the reason why you subscribe to this channel, is because on a daily basis, we release a video, we demystify the entire cryptocurrency market, we talk about the entire cryptocurrency market. And while the mainstream media, either they never share this stuff with you, or if they do, they only give you the headlines. They never provide you with perspective. They never give you the full story, the big picture, the context. That's exactly what we do here. That's exactly why you subscribe. And the point of today's video, you've probably seen the headline. If you haven't, I'm going to tell you the problem. I'm going to tell you why this is outrageous. And I'm going to share with you and show you unequivocally why this is manipulation. This is a trap. They do not want retail investors like you, like me, to be involved in cryptocurrency right now, yet behind the scenes, they are filling their bags. So join us on our road to 1 million subscribers and let's get into it. What the SEC is doing is unequivocally 100% manipulation of the cryptocurrency market. They are not providing clear and common sense regulations like they once said they would. Instead, they're not providing clarity at all and just going after bullying certain cryptocurrency companies, just a few of them, based on their whims and not even telling them why. This is directly sending the prices lower. Let me share with you what I'm talking about. The headline is this: "Scrap the lending product or we'll sue," the SEC tells Coinbase. The Securities and Exchange Commission has threatened to sue Coinbase, the largest US-based cryptocurrency exchange, over plans to issue a lending product. The company says it has no idea why. You won't believe the information that CEO Brian Armstrong has just shared with crypto Twitter. Some really sketchy behavior is coming out of the SEC recently. Story time. Listen to this. This is the manipulation. Let me know in the comments if you agree with me. This is what Brian Armstrong has to say. Millions of crypto holders have been earning yield on their crypto assets over the last few years. This makes sense. If you want to lend out your funds, you can earn a return. Everybody seems happy with this, right? A bunch of great companies in crypto have been offering versions of this quite literally for years. Coinbase has just came out recently and said we would be launching our own version of this product. We're planning to go live with this in a few weeks. So we reached out to the SEC to give them a friendly heads up and a briefing that we're going to be offering 4% APY, 3 to 4% when customers deposit USDC coins on Coinbase. Seems pretty standard. The SEC responded by telling us that this lend feature is a security. Okay? Seems strange. How can lending be a security? So we asked the SEC to help us understand and share their view. We always make an effort to work proactively with regulators and keep an open mind. I liked this. They refused to tell us why they think it's a security, and instead subpoenaed a bunch of records from us. We complied. Demanded testimony from our employees. We complied. And then tell us they will be suing us if we proceed to launch, with zero explanation as to why, as they let plenty of other companies in America do exactly this. They're messing with the markets. Brian Armstrong continues, "Look, we're committed to following the law. Sometimes the law is unclear. So if the SEC wants to publish guidance, we're happy to follow that. It's nice if you actually enforce it evenly across the industry, by the way, equally, evenly. They're not doing this. They're just going after a few based on their whims and not providing regulatory clarity. But in this case, they are refusing to offer any opinion in writing to the industry on what should be allowed and why. Instead, the SEC is engaging in intimidation tactics behind closed doors. Meanwhile, plenty of other cryptocurrency companies continue to offer this lending feature, but Coinbase is somehow not allowed to. Do not be fooled, ladies and gentlemen. This is a trap. This is manipulation. We're seeing it play out right in front of our eyes. They're manipulating the prices down. They're scaring the market by threatening to sue certain companies for what other US companies are already doing. And there's just no rhyme or reason. Let me know what you think about this in the comments below. I'll tell you one thing, and I'll get to this more towards the end of the video. I am buying right here. I am buying right here. I fully believe that this is a trap, and I fully believe they're trying to fool us by doing this stuff. Let's continue, because the real crux of this is March 2nd, 2021, as Brian Armstrong continues. Gensler, the SEC chair, said in his confirmation hearing, March 2nd, he says it's important for the SEC to provide guidance and clarity. Sometimes that clarity will be a thumbs up, but even if it's a thumbs down, it's important to provide that. That's not what they're doing. They're messing with the market. And if you don't want this activity, then simply publish your position in writing and enforce it evenly across the industry. How can you not agree with this? Ostensibly, the SEC's goal is to protect investors and create fair markets, right? So who are they protecting here? And where is the harm? People seem pretty happy to be earning yield on these various products across lots of cryptocurrency companies, and surely Coinbase's 3 to 4% isn't that big a deal. Shutting these down would arguably be harming consumers more than they're protecting them. And by preventing Coinbase from launching the same exact thing that other companies already have live, they are creating an unfair market. You agree with this, right? The SEC is creating an unfair market. The SEC is manipulating the prices. And this is a buying opportunity. Like I said, that's my opinion. But many people get scared away because of this. And let's continue, because you won't believe this next part. In May of this year, Brian Armstrong continues, I traveled to DC to meet with every regulator and branch of government that I could. He traveled to Washington. The SEC was the only regulator that refused to meet with me, saying we're not meeting with any crypto companies. And this was right after that Coinbase had become the first cryptocurrency company to go public in the US, and the SEC would not meet with them. See, Gensler had just been confirmed a month prior, so they brushed it off as the SEC was maybe still getting its feet under everything. Now, I'm not so sure. Coinbase has always tried to be good actors in this space, leaning into sensible regulation even when it's difficult or expensive. We try to think about what products we would want for ourselves and what risks we would want our families to be aware of before launching products. Say what you want about Coinbase, like it or hate it, but they're pretty middle of the road. They're definitely one of the good guys in the space and pushing crypto further into the mainstream and making things easier for retail like you, like me. We will keep following this approach. Yet here, we're being threatened with legal action before a single bit of actual guidance has been given to the industry on these products. How is this fair? If we end up in court, we may finally get the regulatory clarity the SEC refuses to provide. But regulation by litigation should be the last resort by the SEC, not the first, unless the SEC has a different agenda in mind than what their job is. Brian Armstrong finishes out saying Coinbase's door remains open. We're ready to talk. Hopefully the SEC steps up to create the clarity that this industry deserves without harming consumers, without harming companies in the process, without manipulating the price. America could really use us all working together to figure this out right now. So the reason that I say this is a trap, the reason I say this is manipulation, the reason that I warn, do not be fooled, is because all the SEC is doing, seemingly purposefully, creating confusion, creating fear, creating uncertainty, creating doubt. Seemingly, all that's happened thus far is Bitcoin, Ethereum, and the whole cryptocurrency market has incurred significant losses. And people get scared when they see this happening. People get scared when the price dips this much. You know what I think is going to happen? There's almost no doubt in my mind. I'm 99.999% sure that at a certain point, the SEC is going to come out and say, we're sorry, we didn't mean it, Coinbase, you're good, or at the very least, just give them a slap on the wrist, or even most likely, actually come out and make clear what the regulations are so everybody can follow them like we all want to. But for now, they're just scaring the market, and it literally makes no sense. So according to the SEC, I guess you're welcome to put your entire life savings into this dog coin, SHIB, or into deep out-of-the-money options on esoteric illiquid equities on different mobile apps, but how dare you even consider earning 3 to 4 APY on a low-risk lending product from a publicly traded company that's following all the rules? This is insane. One of the main reasons that the US has such strong capital markets is because companies and investors can rely on the rule of law. Rather than being at the mercy of the whims of government officials, the SEC is directly undermining its own mission to promote those markets. If this continues, if the SEC thinks that all non-bank interest products are securities that require the offerer to become a public reporting company, then they're not just picking a fight with crypto, they're going after the entire fintech space. But again, everybody who's thinking long-term can pretty much see that Coinbase has enough clients with enough aggregate power to win this. Because bottom line, the SEC is not being clear, they're being inconsistent, and Coinbase and companies like it have a lot of power to fight this. Not to mention all the politicians, more than ever, that hold Bitcoin or hold Ethereum or hold crypto. Not to mention that with this dip, Bitcoin, Ethereum, and the whole cryptocurrency market are looking rather bullish. Consider this. Bitcoin. For those who have been around for a while, you will remember when we stayed at $6,000 for months and finally dropped to 3.5K. Demand was low and recovery took a lot longer. Demand is much higher these days, and that's why I get excited about volatility. This is a place that I'm buying, not selling. Super trend still bullish, momentum still up, and until I see this invalidated, I think we're still on a path to break all-time highs. And taking a look at Bitcoin's monthly chart, all it does is print bull flags and pump. Since 2011, all it does is print bull flags and pump, and it's just what we're doing here. Like I've been saying, launchpad, ladies and gentlemen, launchpad. Not to mention how Bitcoin fundamentally and adoption-wise has never been better. Sats are the standard in El Salvador. You love to see it. 1 out of 195 countries are holding Bitcoin. We are so early. And Ethereum, for totally different reasons, looking equally as bullish, if not more so. With the strength of Bitcoin, Ethereum's looking even stronger. With the strength of Ethereum, cryptocurrency is looking even stronger. And with Robinhood adding reoccurring daily crypto purchases starting at $1, with NBA All-Star Steph Curry joining crypto exchange FTX as a global ambassador, with Doja Cat launching eco-friendly NFTs on Tezos. How can you not be bullish? Let me know which cryptocurrencies you're buying on this dip. Or if you think I'm totally crazy, if you think this is the end, let me know in the comments, because I always like to hear differing opinions. I always am looking to having my mind changed or being proven wrong. So let me know either which coins you're buying, or let me know if you have a different opinion. With that being said, join us on the road to 1 million subscribers. See you tomorrow.